What is up, YouTube? Hopefully you guys are having a great day, and if you are, you can go down and make my day a little bit better by smashing that like button. This is super important for a small channel like this. Every like makes this channel grow and get seen a little bit more. Today, what we're going to be doing is we're going to be going over a top 5 tips list from the company Nerdwallet. The link to the actual list will be in the description, but I'm going to be going over it and giving my opinion on if those are good tips or bad tips and rating the tips overall. If you're into this kind of content where I'm going over a list or reacting to something that has to do with investing, make sure you guys are smashing that subscribe button so you get more of this content. I also do a little bit of news if there's something big that's in the market that's happening. So without further ado, let's get into the video. So here we are, all on nerdwallet.com, a very good website to get some financial information if you're looking for different kind of financial questions. They're most famous for credit cards, but they do dabble in all sorts of investing topics and questions, and can help you out a ton. So let's get into the list right off the bat. The very first one is check your emotions at the door. This is a huge one for most investors when they get started. A good way to remove emotion from your portfolio is when you get started, and pretty much the whole time that you're investing. This money that you're investing, you should, obviously you don't want to lose all your money. Nobody wants to lose all their money, but you have to have an understanding that you could potentially lose all this money, and it shouldn't be something that you're dependent on to pay your bills or to pay your mortgage or stuff that you're planning on doing with that money. If it's in the market and it is like a requirement or something that you're super gonna need down the road, definitely make sure that you aren't using that to invest in, because if you do lose it or the stock does go down, that money is gone. No one's gonna feel bad for you for losing your money, so you have to remove emotions from trading. Number 2 is a very important one as well. Pick companies, not ticker symbols. I see this happen all the time. I know people in my personal life that like to talk to me about investing, and they're always talking about a ticker symbol. They're always talking about this or that. They have no idea what the company does. They invest on trends and they're like day trading and all this extra stuff that's super risky. That's not the way that I like to invest. I like to invest in a company. As you see, I own a lot of Tesla swag. I own a Tesla, and I actually own a lot of Tesla stock. It's actually my biggest position. 1, because I believe in the company. 2, I did a lot of research on the company. And 3, I just feel very confident in the company, not the ticker symbol Tesla, that long term I'm going to get a good return on stock. Number 3, plan ahead for panicky time. This to me is also really important. So far this list has been very good. In a good way, if you don't know what you're doing or you're just getting into investing, is don't start by buying companies. Don't put your money into a broker, get it all set up, get it ready to be invested, but don't panic and jump in and start buying a company. Wait for a pullback, wait for something that panics the market to happen, and then start introducing your money. I always have a watch list. I only own somewhere between 3 and 7 stocks at a time. I never really go and get like really diversified. That's just not my investing style. But I always have a watch list of at least 10 companies that I'm looking at and waiting patiently for a buying opportunity. And I feel like everybody should have a watch list, companies that you're interested in, and always update that watch list. That's the thing I'm updating most. I don't update my positions that often. I update my watch list all the time. I'm constantly, adding this company because I saw a video on it, adding this because I read something on it, adding this because I just thought of an idea and this is something I'm kind of looking into. And then I'm also taking those companies off. If it's like, yeah, it was something I was interested in, but I don't really feel that way that I did, a week ago or whatever, however long ago it was I added it to my watch list. So make sure you have a watch list and plan ahead for those panicky times. When those panicky times happen, make sure you're buying. Also, always make sure you have money on the sidelines. Don't be fully invested unless it is one of those panicky times and you're seeing the market fall, and you have these companies that you've been waiting to put money in. Then it's fine to, I guess, invest all that money that you want to kind of fill out those positions, because that's when you're going to get those gains. Buying the dip is what that's called. Number 4, building up a position gradually. This is really good advice. There's tons of different ways to do this. The one that I know the most and I've talked to people about the most is dollar cost averaging. That's the one that I would refer to. I would definitely recommend everybody go to this article and read it. It's pretty self-explanatory. You're basically just averaging your price in a stock. Let's say it could be something that's set up on a regiment like weekly or monthly or whatever it may be, where you're putting money into a stock every week, every month, until you've put the full amount that you wanted to put into a stock. Also, it's not really talked about in here, but you should know what kind of size you want to have, like how much you want to put of your portfolio into one company when you start buying a position. Be it like 3% if you're in a super diversified account. That's normally the position size of super diversified accounts. Be it 10%, 20% of your portfolio. Know what that number is from the beginning of you buying a stock or when you want to get into a stock. And then make sure that you're not buying all of that at once. Slowly buy that, so that way it evens out your cost basis, and it's hard to buy, the very bottom of anything, and it's hard to sell the very top. This is a good way to get you a good consistent level. That way in the future, you don't buy a company one day and the next day it drops 20%. You buy 1/3 of that company on the first day, and then it drops 20% the next day, and you buy that on the next 1/3 at 20% less. You really only lost 10%, not 20%, if that kind of makes sense. And then number 5, avoid overactivity within the market. That's basically what this one's saying. I don't really like how it's worded, but basically you don't have to be watching the market every day. I do, because I enjoy it. It's fun to me. Something that makes me happy to kind of see what's happening with my money. I don't let the down days get me down. I am happy with money going down. It just, to me, when there's a down day, I'm ready to just go buy it more. But if you're a type of person that can't really handle that kind of stuff, just don't watch it. Pay attention when you need to. If there's breaking news about it, kind of look into what's happening. But don't freak out. Look at it every quarter. Look at it every half a year. Look at it at once a year. Whatever works for you is going to make you a better trader. Do that. And that's not easy to know right when you're starting, but it's something that you should learn over time. If you're getting extreme anxiety about your money being invested, maybe, don't look at it every day. Look at it every week. If that's still giving you anxiety, every month. And then, if you have your money invested for a year and you're still super anxious about it, maybe investing on your own isn't for you. Maybe you'd have more peace of mind if you just gave your money to somebody else and had them invest it. I don't see anything wrong with this list. This list is super helpful. I've made a couple videos myself of investing tips, and I'll list those right above. If you guys want to know more of my tips, or if I don't cover any tips that you believe that should be covered, or if you have any tips that should be added to this list, make sure you put them down in the comments, and I will try to do a video on what you guys think are some super good important things for people to know when they get into the stock market. I haven't really thought about a rating scale yet. I'll give this, we'll do a 1 out of 5. I'd give this list of 5 things a 4 dragons out of 5. I think it's super helpful. I think it's super useful for new investors. And it does cover a wide variety of things that they need to worry about when they first start investing. So I think this is a pretty good list. If you guys know of any other list, also link those down in the comments. Again, there's going to be a link to this in the description. Make sure you guys go there and actually read it. I just kind of gave my reaction to the titles. I didn't actually go through the whole thing. There's a lot of good information in here. If you like this video, make sure you smash the like button. If you like this kind of content, make sure you go down and hit that subscribe button as well. Turn on the notifications. You all know what to do. I'm not gonna sit here and preach to you. You know YouTube. It really does. All that helps out the channel. You just getting to this far in the video helps out the channel, and I appreciate you guys so much. With that being said, love you guys.